Welcome to another lovely episode from JayFx. This is the episode 2, formally the episode 2 of the Harmonic Patterns Mentorship program. Now, I haven't also still sent the PDF file, and that's because a lot of reviews are going on. I'm sending it out to analysts and friends I know, which I have been able to communicate and work with over the years, who are familiar with this method, and we are doing so many reviews and so many changes, so many implementations that I think were very, very essential for me to, get this particular file together. And we have, gone through the informations and done a lot of changes from the first PDF file which I used on episode 1, and which I think were very, very essential. So right now, I'm going to do a formal introduction of what harmonic patterns is all about, because from episode 1, which I did earlier, if you remember, I basically just gave an introduction to the method, and formally saying we're going to be doing this. So on this, I'm going to basically give you guys an insight to what harmonic patterns is all about, and looking at the evolution of harmonic patterns from the past to the current trading cycle and the system we have today. So on chapter 1 of the ebook, as you can see, we broke down the understanding of market cycle, that is from the emotional perspective, basically looking at the energetic field of the trading industry, and also talking about how the system is run, how most of these stuff operates, and basically similar breakdown to what we did on Elliott wave. So as you can see, the market cycle of harmonic patterns is basically similar to what we had on Elliott wave, which the mentorship we concluded, and is also a system that was built around the understanding of sentiments and global events, and understanding basically how fear, greed, and most of these emotions that we react to when the market is in crisis. So most of these were put together, and basically using algorithms and using the digital system today, we are basically able to trade. So that is basically the fundamental structure of how market was created. Now, we had a particular episode which I broke down the fundamental concept of technical analysis, and also an episode which I looked into the history of Forex trading, which I believe would also give a lot of insight to understanding how these emotions and how political events, like what we're having currently with the US, can basically influence us to take decisions that could lead to we becoming the liquidity in the market, because liquidity fuels this system, and that liquidity is basically our reactions to how we get these events based on sentiments. So you could be believing that this is right, and then you take this decision, and from there you make losses and your money is gone, and basically your money goes to the broker, which the brokers pays commissions to the government, and the system keeps rotating, and this is basically how it's work. And I can tell you, I don't think there's any individual who is in charge of this. It's a system that is completely decentralized based on how crypto works as well. Because as you all know, Forex was basically in the system before cryptocurrency was invented. So you have to understand that the relationship between both systems is also deeply entangled in algorithms. So that's basically how we got market cycle, and how this whole emotional stuffs, and how the system is operated using financial algorithms. So harmonic patterns itself is one of a very, 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 let me say, old system that was also introduced at the early period before we had the formal introduction of the digital system to the public. So individuals from Wall Street were using manual, I believe, ways of trading using indicators, like what we have as the RSI. We have so many other indicators, moving average, that were basically the trend of early Forex trading. Okay, back then there were not such things like smart money concept and all of this stuff. So most of the systems that were used back then were mathematical system, calculated systems. And Fibonacci played a very, very big role in this as well. The Fibonacci tool, which is also a very popular system in Forex trading. And From the history, which you can see within this ebook, and I promise you the ebook will be out before this weekend by the time this video is being released, and you can have it yourself and also have a review of it, and basically look at this episode as giving you insights to what you're going to be studying from the ebook. Okay, so I'm just basically giving you a background study to why you might need to want to study the ebook, and basically how you can navigate the ebook and understand it better. So this is like a formal introduction to what we know as harmonic patterns before we can look into the patterns themselves, as you can see like what we have over here. Before we get to this calculation and all of those stuffs in episode 4 and 5, I want us to have a formal history understanding of how this system works and how analysts can gain understanding with harmonic patterns despite their system in smart money concept or Elliott wave or Wyckoff or whichever system you're familiar with. Okay, so the picture of the guy you're seeing within the ebook is one of the great founders of this particular system. As you all know, systems develop over time by themselves. As they get to other individuals, they get reviewed and they get refined and they keep developing. But they all have a starting point. Okay, at the time, there was this individual who would be very, very familiar with this system, who would introduce it to the public before the public would gain that awareness to how to use it. So that is what we have here. So we are not saying he invented harmonic patterns. We are saying he's one of the people who basically refined it to a sophisticated level where individuals could use it to understand the stock market as of then. Because as you all know, Forex market was not a thing like it is right now today. So stocks were basically most of the stuff that traders were into, and most of these stuff were done using the New York Stock Exchange and Wall Street, basic big investors. So that is what we had, and harmonic patterns was a pattern that was very, 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 very popular back then among analysts and those people who give the calls to the investors. And this is one of the individuals we're talking about here that was able to gain that awareness to harmonic patterns. Okay, so as you can see, this is the first pattern of harmonic pattern, like the first official known traditional pattern that was being used to identify trends in the market. Why I'm saying traditional is because these patterns are not just drawn like what we have on smart money concepts, where you can just randomly just identify them. You identify them using Fibonacci ratios. Okay, and these Fibonacci ratios is a system, as you can see over here, that is not just within harmonic patterns or forex trading. It's a system that has been found in art, music, and in so many other aspects of patterns in the world. And I think we're going to dedicate an episode solely to Fibonacci ratios and how you use them in forex markets. The picture below here is a picture of which it's being shown on market structure, not harmonic patterns, but identifying it on market structure and how Fibonacci ratios can help you understand the retracement. So those of you who are familiar with Fibonacci ratios, you already understand what I'm trying to say. I'm just doing this for those who do not know and who are not fully aware of how the Fibonacci ratios work. Maybe you might have heard of it. So the harmonic patterns are basically identified using Fibonacci ratios. So when we say from A to B, if you look at the pattern here, you would see that there's a point from X to A, and then there's a point from A to B. There's from B to C and C to D. These points are identified using Fibonacci ratios. And basically, when we say identified using Fibonacci ratios, to tell you that you use Fibonacci ratios to determine one point to the other. Okay, you don't just randomly look for a pattern that looks like this and then you do that, boom. But you use Fibonacci ratios to identify these points from one end to the other. So it's basically using mathematical calculations like they did back in the days to trade, rather than just looking for patterns of smart money concept and all of that. And when you look at these patterns as well, you can see it has similarities to what we have as the double bottom, what we have as the change of character, and a break of structure and all of that. But at the same time, it's basically giving you calculated moves to it as well. Not just saying, you have those areas of interest randomly by just identifying patterns of liquidity or break of structure. It's basically using Fibonacci ratios, which are already calculated using tools within TradingView or your MT for whichever platform you're trading from. So it's a very, very big influence when it comes to decisions. It's a very, very big influence. And then when you go down within the ebook in chapter 5, we talked about how harmonic patterns can also be integrated with Elliott wave theory. So the Elliott wave concept, which I already taught you guys in previous episodes, is something that also you can use. And then at the same time, you can also still use your harmonic patterns to confirm, your confluence, because all these are all confluence. We are trying to put two methods together to also see the perspectives and also see how correct we can be in predicting the market. So these are all confluence. So when you go to chapter 6, you find also a breakdown of how you can use this method with smart money concept. So if you're a smart money trader and you're like, I don't really need this, I don't know how to, fuse it with my concepts. As you can see within the ebook, we have some breakdowns of the relationship between what you can find on harmonic patterns and what you can find on smart money concept. So here we have a breakdown of liquidity, some of the concepts that align with harmonic patterns, like I said earlier, with the double bottom. And as we all know, in smart money concept, double bottom is identified as liquidity, which is this you see here. And at the same time, it is something that when you observe it with harmonic patterns, you can see we had A and C form something like a double bottom, but at the same time, this is where you get an entry from, and this is the bullish pattern. So this is identified as liquidity, and this is identified as your entry point, and then you ride the trend to the top, okay, to clear out these highs. So it kind of like stays in alignment with the liquidity concept, which is why I believe when combined can give a stronger confidence, because as we all know, these methods are not calculated using mathematical ratios or all of those stuff. Smart money concept is solely on insights and understanding with market structure. So when you involve a tool that involves mathematics and calculation, we then know that, okay, these patterns are then calculated, and it's easier to trust your confluence, because as I said earlier, they are all just confluence. So there's also insight about imbalance, which I believe you guys are already familiar with, and then there are some images which I was able to locate some patterns that were able to rhyme up with smart money concept and display for you on chart to show you that it's possible for you to do this. And this is what the ebook is all about. Within chapter 7 is dedicated solely to risk management and how to calculate your positions. So as you can see, we have breakdowns of multiple ways to maximize your risk and also maintain a proper trading plan, because I believe this is also a big role when it comes to trading. It's a system that a lot of people need to also understand as well. In as much as you're learning from the aspect of technical analysis, you have to also find out time to calculate your risk to reward ratios and your take profit. So we dedicated this particular chapter to just that, and we have some pictures as well that could also help you understand better. So this is what we have for the Harmonic Patterns ebook, and I'll see you in the next episode where we talk about mainly the patterns of harmonic method. I'm going to be breaking down these patterns to you, and probably maybe we'll be going to the chart where I'll show you guys more examples as well. Thank you, and I'll see you on the next episode.